Welcome to Real Estate Exposed, helping people in San Diego buy, sell, and refinance their biggest investment, delivering you timely truths, exposing important issues, and helping you get into the right home. Here are your hosts, real estate expert Daniel Beer, top-ranked professional by sales volume at one of San Diego's largest brokerages, and his mortgage partner, Todd with over $2 billion in funded loans.
Hey, welcome back to the show. It is Real Estate Exposed with Daniel Beer and Todd Pianin. And we're just happy to be with you here after an awesome week at the home selling workshops. And what a blast it was, and how nice, Todd, how to just be there belly to belly, face to face with so many of our listeners and so many would-be home sellers and buyers that are looking to position themselves more intelligently for their future move.
It was incredible, Dan. I mean, I don't think we've ever had such a turnout. I mean, the turnout was awesome. The questions were awesome. I mean, I think that, how we changed up the presentation was fantastic. I mean, there's for all you guys who didn't make it to the event, there's one slide that Dan shows that it's a cartoon, and he's keeping it, and it's going to be in the presentation. So you guys, for the next seminar, you have to come and see this one. It is the best cartoon that I've ever seen in my entire life, and Dan actually had it created specifically for the presentation.
The Listed and Pray cartoon?
The Listed and Pray cartoon.
The Listed and Pray.
It was awesome. It was awesome.
The marketing plan of virtually everybody.
Well, based on that, I would say based on what you said, for sure. So, Dan, a couple of things. There was a lot of themes throughout the seminars. I mean, you got some really poignant questions. You got some questions that we haven't gotten before. So I think it'd probably be a good idea. Let's just to take this show to kind of answer some of the questions that were brought up during the at least this segment about some of the questions that were brought up during the seminar.
Right. We had what's really nice about the workshops is because we're in front of and with so many people that are looking to sell their home or buy their home over the course of the next 12 months, we get to understand what is on your mind. So here are some of the top questions.
Why don't we just go question by question? Because I know the first question.
We're going to go question by question.
Okay.
But here are some of the top questions that were presented or were asked or brought up by the audience at the workshops, and we want to bring you the answer as well, as it's very likely relevant to what you're what's on your mind and what you're asking. So here we go. First question was that we thought was one of the best and most common questions that we got. How do you reach out-of-town buyers? How do you market property to out-of-town buyers? And that's something that people ask a lot about, right, Todd?
Yeah, people say a lot, and I think a lot of realtors use that as a hook, right? Because they work for companies that say they're an international company and that they do something special, and they're going to get Chinese buyers or Japanese buyers, and they're going to, it's almost comical that people think that is such a major play. I mean, in the environment, but I mean, it was a theme. It was a good question. I mean, so Dan, how do you get out of town buyers?
So when you have a strategy that reaches each and every high leveraged relationship out there, and what I mean by that, there are certain relationships you can go to, certain contacts and people you can go to, where if you put the property in front of them, they're likely to know somebody that is good for the property. They're likely to have somebody in their database that's good for the property. And there's an entire process and method to that madness, which we go into great detail on at the workshops. And if and when we do them again sometime in the future, we encourage you to be there to hear all the detail. But here is the key point. And the main thing that we want to expose here on Real Estate Exposed. Like Todd alluded to, it's often a hook used by these agents, by agents that don't actually have a plan, a process, a methodology to find the entire marketplace for your home. Okay, that's what we do. By definition, that includes the out-of-town buyer. Two things to keep in mind here. One is that when you're dominating the online presence for homes like yours, it's on the World Wide Web. So often when so many people ask the question, how do you reach an out-of-town buyer? Last I checked, if the internet works in virtually every country, right? It's if you have the best and most dominant presentation online and you're best positioned and you understand the things we teach at these workshops, like virtual shelf space and absorption rates, and you understand list to sales price ratios, and you know how to position your home appropriately, it's photographed appropriately, it's staged the right way, and you have the winning presentation online, then you are reaching out-of-town buyers.
Right.
And finally, more to Todd's point about it being used as a hook, okay? Look, my brokerage has it too, all right? My brokerage, there's all the big brokerages have, you've probably sat at a presentation at some point if you've ever sold your home and someone tried to tell you, look, we have this service and this relationship with this
guy
company
in Hong Kong.
Yeah, in Hong Kong, and they translate the listings and they do this and this and that. All I can share with you is that 300-something sales later, I've never seen one come from that strange, weird translated listing somewhere in Hong Kong. Now, where it does come from is in leveraging all the right relationships with the people most likely to have contact with each and every buyer and dominating the online competition. So that's the answer to that.
Which you do anyway, right? I mean, a lot of people who've been to the home selling seminars or have called in, have talked to Austin. I mean, Austin, you and Austin make those calls to those.
I take the idea of having strong outreach so darn seriously that I literally have a licensed agent on my payroll whose only job it is to be on the phone with part of his day time blocked to simply go finding and speaking to and contacting these highly leveraged relationships and then putting your property in front of them. So that's how we reach out-of-town buyers.
I guess it's on people's minds because people believe, I guess, that the they watch these reality shows like $1 Million Listing. We've had Josh Altman on before, and in a lot of the big markets like LA, New York, and Chicago, you're seeing a lot of out-of-town buyers buy homes. I mean, my question, I guess, and Dan doesn't like to talk about this, but he's going to be in the top 150 of the Wall Street Journal this year of most biggest in the country. So he doesn't like to talk about that, but I mean, so my question to you, Dan, is, I mean, out of all the deals you did last year, which I think was like 122 transactions,
122.
I mean, how many of those deals came from these mysterious out of town buyers?
We did out of town deals,
right.
But the interesting thing is that they're with local agents.
Who brought them in?
Exactly.
Right.
So
and they followed, and it followed your plan. It followed your 5-step plan that we talk about. What's the next question, Dan?
One of the next questions that came up most often, and this is really a very, very important one for us to discuss. And it was, what's your commission? And this isn't about me. Regardless of who you're selling your home with, it could be anybody. What is your commission is a very misguided question. So I'm glad to take a few moments here to walk through why that is not the right place to start. It's kind of like, you cannot understand the meaning of commission in the absence of understanding all the value being provided, right? So sometimes even just at the office, forget the workshops, when we're at the office and somebody calls and, what's your commission?
Is that the first thing they ask?
Sometimes, not everybody. Most wise sellers understand that question is completely empty of any meaning without understanding what's being done for them.
Right.
Okay? But it's, any number can be a big number and any number can be a small number depending on what's being provided. Even if the full commission was 2%, something absurdly discounted, just something completely absurd, okay?
Right.
2%. Well, if all that's happening is you get some photos slapped online and then somebody just waits around for an offer, then you're actually overpaying, okay? If
they do that, period, you're overpaying.
Yeah. If the commission is 10%, something absurdly high, for the record,
you ever taken a deal for 10%?
I've never taken a deal for 10%. But just to use an absurdly high example,
right.
10%. Well, maybe it's not that high. If they're guaranteeing the price, paying for all repairs, taking care of your termite, doing a pre-inspection, having an appraisal done, and then doing some other thing, and then broadcasting a commercial across all Southern California during the Super Bowl.
So,
okay, you get the point.
I get you. They're out saying
you can't understand commission without understanding value and what's being provided.
But let's just cut, because we're real estate exposed. I'm going to cut to the chase. Do you charge any more than anybody else does?
No, see, the thing is you can have top level representation from me or from somebody else for virtually the same as most agents. And then there is a list, and I freely provide this. As soon as somebody asks...
The discount brokers, we know the list.
As soon as anybody asks, I say, absolutely. Do you want a list of anyone that'll do it for just about any price because they're just thrilled they're going to get to pay their rent this month, and they'll take your listing no matter what? Yeah, absolutely. Those people exist. But when you actually look at the fact that you have to pay the buyer's agent their full fee, and so you're really only talking about negotiating a portion of half of the commission, and then you're looking at everything you're going to lose, and you're going to do your multi-$100,000 transaction,
possibly millions of dollars,
depending on what neighborhood you're in.
Exactly.
You're going to do that and entrust it to somebody that's possibly doing their third or fourth deal over the course of the last 12 months versus their 100th deal in the last 12 months. And if that is the type of person you're going to entrust that your life to, your savings to, your retirement to, your kids' trust fund to, or not trust fund, but college fund,
right.
If their education, if that makes you comfortable, because let's face it, let's take a $500,000 median price point. When you negotiate half a point off of your listing agent's commission, but you just went from a top-level broker to someone just thanking their lucky stars that they actually got a deal and they have no idea how to actually do it.
Right.
You're talking about nothing. You're talking about $2,500.
Right.
The top-level person is going to negotiate for you far more than the $2,500. Well, it's just a misguided question.
The thing that was just so shocking when you said to everybody, you stood up and you said, "I charge the same as everybody else." The look on everybody's faces was priceless. I wish we had a picture. I wish we got to get a, next time around, if we get that question, we got to make sure we have a picture, because what you do is so different than what everybody else does. It's just amazing to me. And we get this question all the time. What was the next one?
So we got a very interesting question from a potential home seller regarding their solar lease. And coming up out of the break, we're going to want to discuss how solar leases can impact your buyer pool. It's interesting and something you definitely want to consider when doing that buy versus lease analysis on your solar and how it could affect your home sale and your buyer. That's coming up next here on Real Estate Exposed. You're listening to Daniel Beer and Todd Pianin. We're going to be right back with you. We're right back here with you, Real Estate Exposed. I'm Daniel Beer with Todd Pianin. What's up, Todd?
What's going on, Dan? Home Street Bank. If you need to reach us, you can reach us at. What's the number you can reach us at, Dan?
So we're talking about the most common questions that home sellers ask at the workshops. And if you have a question of your own, whether you want to talk real estate or loans, the number's 800-676-2420. If you're looking to sell or buy and you have a question related to it, Daniel Beer, ask for me at 800-676-2420. Or if you're looking to purchase or refinance, Todd Pianin is your man at Home Street Bank along with his partner, Taisha Lindsay. And the phone number is 800-676-2420. And we're just absolutely pumped up because we just came out of our home selling workshops where we got to be belly to belly, face to face in Mission Valley and Rancho Bernardo and in Carlsbad with people from all over the county, people that drove down from Temecula, people that drove down from LA, and just had an incredible time teaching people the virtue of knowing how to put together a smarter strategy for your home sale than the methods used by traditional agents, and how to have your home predictably sold within 5 days of going on the market. These workshops are the only place we expose every step of the process.
The funniest thing about it, I have to say, was we had some past clients in the audience.
Oh, it's great. That's actually one of the nicest things about it.
Yeah, but I guess the point I'm trying to make was I think they were trying to see if it was like what you did, to sell their home, or how you did it was really, is that what you're teaching in the seminars?
Right.
It was pretty cool. It was just cool. It was cool also to see a lot of friendly faces because.
Well, it was cool to have somebody. It was cool to have people that had a great experience buying that are now considering selling, and they just had such a good experience with the purchase and loan process, because one of them you actually happen to finance as well, and This is going back a few years, and then now wanting to figure out what that right strategy is for the home sale. So we've been discussing the most common questions coming out of the workshops, and we want to bring you the answer, because we figure that if everybody at the workshop was, wondering what, having certain things on their mind, it's very likely relevant to you. And we're going to talk about solar leases.
Yeah, it's become a big problem with us, Dan, on the lending side, because no one really thinks about the time it takes to assume a solar lease, or the time it takes to, they don't also to tell us that there's a payment sometimes attached to it, so it can throw a wrinkle into our side of the transaction.
Absolutely. When you're thinking about doing solar for your home, which I completely advocate, by the way, I have it on mine, but you need to understand when you're doing that lease and sale analysis, you need to understand the implication of what it does for your buyer. A solar lease where you're making a monthly payment. Well, Todd, why don't you take us through it? But basically, it's almost like having an additional HOA payment, right? It's basically that payment on the lease. The buyer's going to have to qualify for that, plus the principal, interest, taxes, insurance, and the rest of it.
Correct.
So what do you the pitfalls you see as it affects people's debt to income ratios and so on?
A lot of agents aren't telling us about it, right? So we're finding out.
They're not telling you ahead of time.
Not telling us ahead of time. So we're finding out in the 11th hour after we're about ready to go to loan documents, and all of a sudden, pow, solar comes up.
There's a question to add to your questionnaire up front.
Exactly. So we're now handling things differently, and then a lot of solar companies too are really busy right now because a lot of people are doing solar. So getting the reassignment on the title is also becoming cumbersome, right? It used to be really, we could get it done quickly, and you could, they would subordinate.
Explain that, the reassignment on title.
So Dan, when you buy a house, right, you're going to have a new loan for your first, and you're going to have a new loan for you're going to have a new loan for your first. That's going to be in first position. But if the existing seller has a solar lease on their property, and the new buyer is going to assume that lease, then that solar company has to subordinate to our new first the buyer is buying. So you have to go back to, so what that, you understand what that means?
Yes, absolutely.
So you have to go to the solar company, get them to agree to the terms to subordinate. Plus, then we find out, payment. That's usually when we find out there's a payment on it, and then we got to add that to our ratios.
So, from my perspective, selling homes, and if you're going to do a lease, there's certain price points, and typically the lower your price point, the more your buyer profile is likely to stretch to their top dollar. Versus at higher price points, once you start getting into 700,000, 800,000, 900,000 and up over $1 million, people can often afford more than what they're buying. They have typically going to have bigger down payments, and they're not necessarily stretching to that last dollar.
Right.
So the time when a solar lease payment is possibly going to affect you in the sale of your home is when you have, say, a $350,000 or $400,000 house at a price point where a lot of people really are buying up to their max amount. And now you're asking them to qualify not just for their mortgage payment, but also for the lease payment of the solar. And so there will be certain buyers that no longer qualify to be a buyer for your property because they just now no longer qualify for the loan. Their debt to income ratios are no longer where they need to be. And so you'll lose that portion of buyers. Having said that, if you have the right strategy to drive all the buyers possible to, the entire marketplace of buyers to your home, you probably weren't going to want to do business with that person anyway.
Well, which we find out through the cross-qualification process that you do on your deals. So.
You need to have a lender. We use Todd to cross-qualify all of our buyers to make sure that they're as strong that they are qualified as strongly as they could possibly be. Because when you have the choice, when you've done a good job of actually driving the whole market to your home and through a process like our 5-day blitz, well, you probably don't want to do the deal with a person stretching to the last possible penny anyway, because if anything goes wrong, they're out. They have no flexibility. So that's also the nice thing about being able to drive the whole market to your home. Overall, let's on the record, solar's a great thing. The only unfortunate thing is when people go in blind, not understanding how it could affect the future sale, and especially sometimes when you see people putting a lease on a property that they're selling a very short time later. Right. You're listening to Real Estate Exposed here on News Radio 600 KOGO. I'm Daniel Beer with Todd Pianin, and the phone number for us is 800 676-2420.
You can find us on Facebook, Real Estate Exposed. You can find us on iTunes, on podcasts as well.
And coming up out of the break, we're going to talk about, if it's such a good time to sell, and there's certain reasons why it's absolutely a time to sell. But what about buying? It's an interesting point in time in which selling and buying both make sense, and we're going to explore that right out of the break. Here we go. Welcome to the third segment of Real Estate Exposed. I'm Daniel Beer with Windermere, and my man Todd Pianin of Home Street Bank. Man, all I can say is my brother just recently purchased a home. That's the guy I entrusted the deal to. So, Todd, it's a good time to sell a house if it is that you're moving. Not because, okay, let's get something very clear. Whenever we tell somebody it's a good time to sell, not because we think that the world's falling out from under us tomorrow and sell right now so that we can get no, none of that's happening.
Correct.
If it's the right time in your life to sell, it coincides with a good time in the market to sell right now.
Right.
Why? Consumer confidence in housing is at a good level. Interest rates are wonderfully low. Inventory is low, so your competition as a seller is low. And the price index, pricing, we've recovered most of what we had previously lost. So, there's a lot of people out there that had homes that went unsold in 2010, 2011, 2012, and now you can actually get more than what you failed to sell for during those years. And we've helped a lot of people do that. But what if you are selling not because you're disappearing from the world, but because you want to buy into your next property for your next, the next shift in your lifestyle? You're retiring, your kids are leaving the house, you have a change in what your household looks like, you're just getting married. So the beautiful thing about today is that you get to sell into a very good environment for a home seller, but you get to lock in a rate that is wonderfully low, and a lot of people don't quite realize how low they are because the Fed rate hikes got so much press, Todd, that everybody just believes that those rates are going up. But if you look, Todd, talk to where are rates, what are they doing, and what has been the effect of what the Federal Reserve did with the hikes that they announced.
So what happened was in the end of the year, Yellen came out and did a federal rate hike. Basically raised the borrowing rate from bank to bank. And then she also claimed that she was going to do 4 more rate hikes this year in 2016. So we thought we'd start seeing an upward moving trend in interest rates. Well, come January, the sky fell out of the global markets, and we've seen interest rates. We haven't seen interest rates this low for almost 4 years.
So the equity markets in other countries such as
Japan, China, Germany,
affected
oil prices,
the flow of money globally.
Correct. Japan is doing negative interest rates right now, which are actually basically paying banks to borrow money.
So people are essentially saying, "Hey, Japan," people in Japan are saying, "Government, here's $1,000 or yen or whatever it translates to.
Right.
Let's just call them here's $1,000. Hold this for me, please. And as long as you guarantee that $999 will still be there for me down the line, then I'm happy with you holding that, and I'll actually pay you to hold the money."
No, other way around. So what they're saying is we're going to borrow $1,000, and they're going to, for the sake, I'll make it simple. We're going to borrow $1,000 so we can do this mortgage, but you only owe us $999 to pay it back.
That's how the government is treating the banks.
That's how Japan on negative interest rates.
Got it.
Correct. So what we've seen is a kind of a collapse in mortgage rates. We're seeing mortgage rates drop to all-time lows.
How does that happen? Because you have the turmoil in financial markets around the world, specifically right now in Asia.
Right.
And
you also have oil at all-time lows.
Oil at all-time lows, and so you have money flowing where? Where does money flow? And it's essentially basically to the bond market here in the United States.
Correct.
as
we're
a
the current
safety vehicle.
We are like the safe currency in the world.
And so when people are buying the 10-year Treasury bond, that trickles to rates.
Well, basically there's sort of an inverse relationship. As the yield goes down on the 10-year bond, you see mortgage-backed security rates, you'll see them drop as well. So what I mean by that is because it's a flight to quality or flight to safety, so the 30-year fixed is usually triggered against the 10-year bond, and that's basically how long money's going to be in the marketplace.
So essentially what's happening is that all of this money, the flowing from equity markets around the world, and actually from here in the United States as well.
Yes, correct.
I mean, I could tell you that I recently spoke with my financial manager, planner, etc. Never know quite what to call her.
Right.
But I recently spoke with her and said, look, I want to go further into cash because I want to have ammunition for just the, for a little bit down the line. I think 6 months from now, I'm going to want cash. I'm going to be happy with having made the decision to have some cash. And I'm also in the process of buying an investment property here in the North Park market,
right?
Which will serve as a rental for me. So it's not just globally, but also locally, money's flowing out of equities. And when we're saying equities, folks, we're talking about stocks, right? Your typical stocks and mutual funds. So when it flows out of equities, where does it go?
It goes into cash or goes into the bond market. So people will buy bonds because everyone believes that nobody is going to, that the U.S. government is not going to default on their debt.
And so when people buy these bonds, it drops their yield, or essentially the interest that they pay, and that is exactly what mortgage rates are tied to.
Correct.
So basically, the effect of all this movement of money globally has been more powerful and more significant than the federal funds rate that Yellen hiked back in December.
Well, she hiked the bank borrowing rate. So what banks charge each other to borrow money. So, yeah, correct. And so what I would say to you is that what you're seeing as a buyer, you're seeing interest rates at an all-time low. You can buy more for less of a mortgage payment. You're going to get the best interest rates that are out there right now. And so, when we talk in this market, when we talk at the seller seminars, we talk about selling your home and a great time to sell, but you also are going to become a buyer. And what I would say to you is it's an unbelievable time to buy, and it's because you can borrow money so cheap. I mean, we had a client just the other day, Dan, that was going to pay cash for their property. And when I told him how much his interest rate was going to be, he goes, get me a loan. I mean, and he wrote the offer all cash, and we're going to close with a loan on the property. But he was like, yeah, get me a loan because I can do way better on my money else in other places, either buying more real estate or whatever. But it's so cheap, why not just take advantage of it?
We just had the same thing with somebody that has $800K that he's going to invest into his dream home for his family, and then he kind of woke up the next morning. Deciding that wasn't going to be the route they were going to take because they're still young and they still want to build wealth, and so they're actually going to take $800K, lever it at 3 point whatever percent their rate's going to be at, 4%, 3 point whatever it might be, and they're going to be able to really take advantage of owning assets that are available to them at a cost of capital that would not typically be available. And so there is a lot of that. And that goes back to, because by the way, you are listening to Real Estate Exposed with Daniel Beer and Todd Pianin. Daniel Beer of Windermere Real Estate, Todd Pianin of Home Street Bank. And it goes back to something we discussed a number of months back from a Barron's article. And what's really interesting is that Barron's published an article showing that since the Great Depression,
right,
there's only been one bear market, equity bear market, okay, for stocks,
okay,
where real estate didn't outperform every other asset class. And that, of course, was the most recent one, the 2008 crash.
Right.
Okay, so the 2008 crash, though, was made up of it was a house of cards. It was made up of nothing. It was a fake market. It was people buying. Did you see The Big Short?
I finally saw The Big Short.
It was strippers owning 4 properties.
Exactly, I did see The Big Short.
Okay, that's like my favorite scene is the guys at this strip joint. This young gal, she's dancing and talking about like her 4 mortgages she has on
how she didn't have to didn't have to qualify for the mortgage and how easy it is to. It was I
think the application was like in her underwear somewhere.
Exactly, or probably at the strip club.
So. That's what the old market looked like, and that's why you had, money it flew into gold, actually.
Right, for protection, correct, as a hedge.
Well, going back, though, aside from that market, going back to the Great Depression, every time the equity markets have entered a bear market, meaning they've been in a negative cycle, then real estate has been the best performing asset. And you're seeing that happen right now. Money is flowing out of global equities and toward real estate. So it's an interesting time to sell into this low inventory with this with this confidence that people have in housing, yet take advantage of really phenomenal rates going into your purchase, and then being able to have, you know, that rate serve you into your retirement, or for your, you know, you're having kids, or your kids are leaving, or whatever it is that's going on in your life. So a pretty interesting point in time. You're listening to Real Estate Exposed here on News Radio 600 KOGO. Todd Pianin and I, we didn't get to answer every question at the workshops, and we do invite you to contact us. Let's talk about how we could best help you create a strategy for your purchase or sale or refinance. The number is 800-676-2420. The number is 800-676-2420. And specifically, if you're looking to find out what your current home value is, we will do that for you. You cannot find out on Zillow. You cannot find out online. It isn't available there. You want to know why? Why? If I told you that I had a Prius sitting out in the parking lot and told you what year it was, you're going to give me a. Did you know exactly? Do you know exactly what the value of my car is? No. You don't know if I have a nav system. You don't know if I have leather. You don't know how many miles are on it. You don't know what the wear and tear is on it.
The Priuses come in leather?
Oh, absolutely, my man. Mine does.
I didn't know that.
Oh yes.
I figured you electric guys didn't like leather and stuff like that.
Well, who knows what the material is? It looks like leather to me. We're coming up out of the break here with Dan Beer and Todd Pianin. You're listening to Real Estate Exposed. The number's 800-676-2420, and we have more with you. Welcome back to our final segment of Real Estate Exposed. I'm with Todd Pianin of Home Street Bank, Vice President and Branch Manager, and just absolutely the man as far as anything money concerned. And I'm Daniel Beer. We are
the man, the myth, the legend, who is in the top 150 in the country for the Wall Street Journal. I just want to bow down to him.
Oh, okay. Look, we are very proud of having.
I'm very proud to be
done what we did last year, but
I'm proud to be affiliated with you, because that's a huge feat, Dan. And you even said this has been one of your dreams was to be named in the Wall Street Journal. So I just want our listeners to know that it's, you know, I tease him about it and I give him a little rubbing about it, but we all know that, you know, he earned it and he did a great job. And in this year, he'll beat this year's number. He'll beat numbers again. So
a few things that have to be mentioned. Whether this is,
our bet has to be mentioned too, because we still haven't booked the time for our bet.
Well, we'll talk about that next week. No, but something that has to be mentioned, Todd, is housing hasn't had a very big role in the political climate during this entire campaign on either side of the aisle.
Yeah.
And so this will be the one and only time that you'll probably hear me give Hillary any kind of praise. So if you're a Hillary fan, listen closely. Feel free to tape me, because you'll probably not catch me saying much else at any point soon. But nobody's been mentioning housing. Neither side has talked very much about the importance of home ownership, of protecting it, of protecting the interest tax deduction, of any of it.
Well, I am going to fight with you a little bit about that, because they've also talked about, all the Republicans have talked about repealing Dodd-Frank.
Well,
that's a pretty big deal.
It's a huge deal, but it doesn't speak to the heart of the consumer.
Correct.
Because Dodd-Frank is very much an industry-known thing. You know, it affects us as lenders or as realtors.
Right.
Of course, it does affect you as a buyer or a seller, so you'd want to know why, and that's a reason to connect with us as well. But I have to say, for Hillary to bring it into, you know, the forefront of a recent speech and really highlight home ownership and talk about home ownership,
she's begging.
I'm glad. Yeah, no, I don't disagree with you, Todd. But I'm just glad that it's now out there. I'm looking forward to hopefully seeing some intelligent response from
Republican
the rest,
side,
you know, from
GOP,
everybody else,
right.
and frankly from everybody.
Right.
You know, we deserve to know where Mr. Bernie stands, just in case.
Mr. Bernie stands at 90% tax rate. You can go to Mr. Bernie and see Mr. Bernie's tax plan online, and you'll see what it's going to cost you.
Yeah, absolutely. The problem is that nobody goes online, so we deserve to know out front in public.
And a lot of the GOP candidates are talking about just doing a flat tax. So I mean that could either help or it could hurt, depending upon what happens.
So here's what we've done trying to help you out. Todd and I, from time to time, will put together some reports, a special report that serves a big need in the marketplace. And so the report that we have for you, and it's free, by the way, just send us just give us a phone call or look us up on Facebook or go ahead and email us. But the report is 4 quick ways to buy a home with little down. There are so many ways to buy a home with little down. We just continue to have conversations with people that just assume that 20% is the only available down payment. There are a number of options. There's also a number of strategies that frankly don't even have anything to do with what the lender's going to offer you.
You realize FHA, you can buy 2-unit, 3-unit, and 4-unit properties with 3.5% down, Dan? There's so much flexibility out there if people get aligned with the right professionals. Todd and I have put together this report for you. It's the 4 quick ways to buy a home with little down. And to get the report, just simply call 800-676-2420. That number is 800-676-2420. We spent time to put this together for you. It also, by the way, will entitle you, if you do get this free report and you do your financing through Home Street Bank and Todd Pianin with Taisha Lindsay, you'd actually also be able to qualify for a free appraisal. Agreed.
So that's the number to call. Get your report. We'll have it sent and emailed to you right away. The number's 800-676-2420. And it's been another great week here with you.
It's been a
Sunday morning.
It's been a great week. It's been a great Sunday. I can't express the thanks enough to all our listeners who showed up to our home selling seminar this past week. It was awesome to go belly to belly, as Dan likes to say. I'm Todd Pianin from Home Street Bank, a member of the FDIC Equal Housing Lender, NMLS ID number 304014.
And I'm Daniel Beer. Listen, one more thing. If you're looking to buy a house right now and you haven't been able to find the right property, or your agent is only showing you what shows up on Zillow or Trulia or Realtor.com, if that's all you're looking at, you have to get in touch with us, because we have access to a number of off-market listings that are coming up but nobody out there yet knows of aside from those working with us. Number's 800-676-2420. Love you and have an awesome weekend.